I realized at a very early age, though, I was probably going to get one opportunity to be successful, to get out of the environment that I was in, and whatever door was going to open, I promised myself that I was going to run right through it. My dad told me at an early age, like, make sure that you show up and look like you own the place. If you're attracting everybody, it's probably not going to work.
You're listening to the Radcast. If it's radical, we cover it. Here's your host, Ryan Alford.
Hey guys, what's up? Welcome to the latest edition of the Radcast. We're talking the green stuff today, my friends. We're talking money. We're talking wealth. Talking strategy. We're talking to Rob Luna. What's up, Rob?
How you doing, Ryan, man? Excited to be here with your audience.
Yeah, man. I'm excited. It's a very topical conversation now with just the markets and different things, which I know we'll get into, and seen you on the news talking strategies and things like that. So I'm excited to give our audience some wealth tips today.
Yeah, it's a good time. I think a lot of people who started investing just the last few years, whether it's real estate, crypto, bonds, stocks, they didn't realize that all that stuff could go down as well as go up. So people were trying to reconcile what to do with their own money now.
I know. We have been in that cycle. It's funny you say that. It's like everything's been going up, right?
Yeah.
Home values going up. You know, I knew the market was wild when used car values because think about, you and I are probably similar in age. I don't know, I might be a little older, but when did used cars increase in value in 2 or 3 years? You used to always lose money on used cars. I'm like, something is amiss here.
Yeah, it's funny, man. It's part of that, not to beat up on the millennials too much, but it's part of that instant gratification society. We're purchasing, my wife and I, a G-Wagon for her. And so we're looking, and the used ones are like $20,000 more than the new ones. And I'm like, why would I do that? She's like, well, you have to wait 5 months. I'll wait. I'm not going to pay 20 grand more for a used vehicle, but that's what's going on out there right now. Crazy stuff.
That's crazy. I'm thinking about selling my Range Rover. I'm like, all right, I like this thing, but seeing what the used values are, I'm like, is this a bubble? I might want to get out. I might cash that 15K out.
Yeah, exactly.
Cool, man. Well, let's. I know some people have probably seen you on TV. I know you've been out there and you're verified on a lot of channels, and I didn't know how well known you were, Rob. I was like, damn, this guy, he's on the news every week. But let's give everybody a little bit of your background in wealth and management. You manage a lot of money, give a lot of advice, and I know you've gotten into some coaching things, which we'll plug all of that. But let's talk about some of your background.
Yeah, well, I guess I get to start way back just to kind of humanize, I guess, who I am. A lot of people look at maybe my bio being on, Fox, CNBC for the last 10 years, Wharton, UCLA. They hear all these things and they think, oh, maybe this guy was, grew up with a silver spoon. They really couldn't be further from the truth. And the reason I, talk about this is because I think I'm really a poster child for if I could do it, anybody really can do it. I grew up in Southern California during the 90s, the NWA era, huge gang violence that my brother was part of, has been incarcerated now for, well over 25 years. Just that type of shit that, a lot of people have horror stories. I had that horror story. It was kind of sports and education, though, that got me away from that, out of that. First to, go to college, first to buy a home, first to start a business, all of those things. I realized at a very early age, though, I was probably going to get one opportunity to be successful, to get out of the environment that I was in, and whatever door was going to open, I promised myself that I was going to run right through it. And that just happened to be when I was a sophomore at Arizona State University, where I did my undergrad. There was an ad in the paper at the time in 98, 99 that said stockbroker trainees. And I was a psychology major initially, but I said, shit, you sound like you can make some money with that. And so kind of showed up to an interview with 500 other people, luckily got the job, put my foot through the door, started with Waterhouse way back then, worked for a hedge fund, ultimately started my own firm in 2002, where, just like everyone, you start with the small clients. But fortunately, I had a lot of breaks, worked with some professional athletes, celebrities, got written up in Sports Illustrated, Wall Street Journal, all those things, got put on television. And it was really, I hate to say luck because I don't believe in luck, but because I was prepared, but there was a lot of opportunities that aligned at the same time and allowed that preparation to turn into execution. And wound up selling my wealth management firm a few years ago to a big publicly traded company, finishing out that this year and just transitioning into some new things at this point in my life. Primarily what I'm doing right now, a lot of people haven't heard of me. I haven't been on social media up until about a year and a half ago, primarily because wealth management, when you're dealing with, it's really more about hush hush. They don't want their business out there. And so when I kind of transitioned and tried to, what I call democratizing, the information of how do you build a business, how do you invest, that's kind of when I got out there. And it's interesting though, you talked about being on the news, and I've been on the news just about weekly for probably, like I said, a decade. But when I got into social media about 18 months ago, it's like everywhere I go now, someone comes up to me, oh, I follow you on Instagram, but on national media, like nobody watches that shit anymore. No one knew who I was. So Instagram allows you to be an Insta celebrity these days.
That's right. Yeah. Well, you're taking advantage of it. Your stuff looks nice. And
thank you.
So, it's interesting to me. I've had an interesting relationship with money. Like I've never had to worry about it because I always figured out how to make it. But then you get older, it's like, okay, figuring out how to save it, right? Yeah. In the right ways. And, now it's not overwhelming, but it's so complex. I mean, you've got real estate, you've got crypto, you've got traditional stocks, and you've got, hedge funds and like all this different stuff. I mean, how would you categorize your strategy, your wealth management style? How do you classify your knowledge or your approach?
Yeah, well, the great thing about it is I've been doing this for probably a little older than I look, for 24 years now. And so I've been working, like I said, with people primarily over the last decade, $25 million above in net worth, most of that being liquid and investable. And so when you're dealing with people in what they'll call multifamily or family offices, where they essentially have so much money, you have to manage your family wealth like a business. I've had the opportunity to be involved with just about every component of that, setting investment policy statement, meaning, to your question, we've got 25 million, 30 million, or if you have 5,000, whatever it is, where are we trying to go with this money? And then what's the place that we can put it that gives us the least amount of risk with the highest probability of achieving what we're trying to do? And that's really why we're all investing, right? And so, like you said, we're both kind of getting to that age where, we still want to take a lot of risk and all those things, and we probably, I know I love what I do. What I love, you love what you do, but you said you had 4 kids, and I just imagine you'd probably rather be there with them right now than talking to me doing what we're doing.
Some days.
Yeah. I think that's true.
On the good days. But yes, true.
I think the ultimate goal for all of us, every client I've worked with, is to make work optional, meaning how do I create that portfolio that delivers a paycheck to my mailbox monthly that's enough after taxes to do all the things that I want to do in perpetuity, right? That's where we're trying to get. That's what I help people solve for. And so when I find people investing, or they come up, hey, Rob, what stock do I invest in? What cryptocurrency do I invest in? It's like, it's not that I try to skirt it. Yeah, I can give you a good stock tip, but what are you really trying to accomplish? Because if you need to buy a house in 6 months, it probably shouldn't be in Solana or Luna or one of the or Dogecoin, right? So really, what are you trying to accomplish? So really, I've invested in everything from wine futures, cryptocurrency, stocks, private equity. But I'll tell you, Ryan, where I'm at today is primarily focusing on people who are going to create first generation wealth. They don't have anybody giving them anything. And in today's market, today's economy, I don't think there's any. First of all, the best investment is in yourself, building an expertise and a specialization. And that's what I did. I went all in. I don't know a lot about many different things, but I probably know just as much, if not more, I believe, than anyone else in terms of personal wealth management and business building. And that's what I focused on myopically over the last 24 years. And so I believe you have to do that. And then secondarily, you don't want to work for other people, guys. You've got to build your own business. You've got to be able to create a situation to where you can manage your own future, because being somebody who's worked with entrepreneurs and senior level executives at publicly traded companies, the scariest thing when you're in your mid 40s and you're working for Google or Amazon or Nike and you're making $5 or $6 million a year and you adjusted your lifestyle is a recession, which we may be going into now, and getting laid off and trying to replicate that somewhere. But when you control your own destiny, look, Ryan, I know it's not easy, but putting all your money when you're younger, 20s, 30s, into that business, I made some great investments, nothing nearly close to the valuation that I got when I sold my business a couple years ago.
Yeah, that's great advice. I know you do a lot now, last year and a half, with personal brands. I picked up on your site, the 3Fs. I'm going to let you kind of explain those for like your personal brand and kind of what those mean. Why those three, and what are the 3Fs?
Look, I mean, I think it's about what motivates you. And so, when I started working with the general public, the whole idea is I need to be genuine to who I was. If people come to me because they want to get wealthy, I need to tell them exactly what I did, because I came from, like I said, humble beings. But, fitness, finance, and fashion. So let's go, kind of talk about those three, which kind of embodies, when you go out there on Instagram, you gotta like visualize who you are. So I started thinking, like, what am I about? What do I do? And it really kind of came down to those categories. Fitness has always been part of my life. I was a wrestler. I played soccer, boxing. I've been lifting weights, since I'm 13 years old. I love it. When Ryan, you look like you're in pretty good shape. When you're, at your physical peak, right? Where, summer's coming, you're not afraid to take your shirt off. The confidence that you have, the way that you feel, the energy to be able to get up like I did today at 4 a.m., probably not go to bed until midnight. You really need to put that first. And fitness, I would say, is probably the most important, because without your health, nothing else is really going to matter. I think the one that, people might push back a little bit on me is fashion, right? I talked about when I got that first job, 21 years old at Waterhouse, 500 other people. They only hired 3 people out of that group. And the guy from New York called me back and said, "Hey, look, the only reason I'm hiring you is because you're wearing that Brioni tie. I can't even afford a Brioni tie. I couldn't have either at the time, but I knew the importance. My dad told me at an early age, like, make sure that you show up and you look like you own the place. I didn't own much, but I owned that tie, and it worked out for me. And that, I think, kind of stuck with me. And especially starting in an industry where you're very young, 20 years old, asking 50-year-olds for $1 million plus, like it or not, especially with social media these days, we all know people are going to make a judgment about you in the first 6 to 7 seconds. So how you look and how you present yourself is extremely important. And I love fashion. I married my wife, who's got a master's degree in fashion from Milan, London. So it's just part of who we are, that creative side of me. And then finally, finance, because, it's expensive to buy nice shit. It's expensive to make sure you're eating well and all those things. So you have to have your finances in order to be able to support your lifestyle.
Of course. I like it. So you definitely are on the, no wonder you're on the fast track with the personal brand, because a lot of people don't get their buckets in order, like you got them all figured out. And I like them. I think fashion, though, might be in one of those subjective things. I mean,
that's exactly it.
My jeans and T-shirt are my fashion most of the time, but
it works for you, man. Look at Steve Jobs, right? But you knew who he was. You identified with him, and that was his style consistently. So.
Yeah, I put on a nice black tie, though. When you got to. What's when I say the words, now that you've embraced it, I like to go down this path, because we, the agency, do a lot of thought leadership for leadership at companies and pushing them into doing personal branding. And you've talked about it, but obviously I see how that transition could be difficult, like you said, in the finance world, some of the privacy stuff and all that. But how has that changed for you? And now kind of how do you view personal branding as, part of your, armor, so to speak?
Yeah, well, look, I've always been a huge believer in personal branding. What they say, people do business with people that they like. They don't do business with companies, right? And so I started with a few different firms before I ultimately started my own firm, all names you would know, all very big names. But ultimately, when I decided at the age of 27 to move and start my own firm out of my bedroom, about 98% of those clients came with me. Why? It was about me. And so they weren't buying the big firms that they were placing their money with. They were buying and trusting in me. And so really keeping up that brand. And that brand doesn't just mean visual, it means integrity. First and foremost, I'd say the thing I'm most proud of over my career of 24 years in financial services is, in financial services, you go to the SEC's website, it's an open book. If you file bankruptcy, if you had a speeding ticket, if anyone said you coughed too loud when they were in a conference room with you, that has to be disclosed on this site. And I haven't had one complaint in 25 years, including the tech meltdown, including the 08-09 crisis, all those things. Why? Is because I always did what I said I was going to do. I didn't promise anything that was unrealistic. I always showed up on time. And that integrity was probably what got me the furthest. Now, also showing up, looking good, right? That was one of the things. I had one opportunity 11 years ago to go into the Fox studio. You better believe I showed up looking my best. All those things matter, right? And looking a little bit different, right? Because, I'm Latino, I'm half Cuban. The way I dress, the way I look, beard, all these things. It wasn't the typical 50-year-old white guy that showed up. I was at the time maybe in my early 30s. And so looking different was actually what they wanted, because the industry was trying to go towards a different color, a different age bracket demographic. And that's really what I was. So my brand has been very, very consistent from the time that I was 21 or 22 years old. And like you said, it doesn't mean suits and ties or whatever that is, but finding out who you are, what you stand for. And then you're going to find out there's a lot of people who don't agree, don't like that. But you're going to also find out that someone's going to say, that's exactly the dude or the lady that I want to follow. And so, like they say, if you're attracting everybody, it's probably not going to work. And a lot of people say, oh, Rob, don't be political. And especially, I think like you, Ryan, as I get older, I just say what I feel and what I believe. It's a lot easier. Some people don't like it, but I don't have to keep track of it. I just say it, I feel it, and it seems to work for me.
No, it's working, man. And you're right. And we're going to earmark everything Rob just said in our personal. We do highlights of like different segments, but that's going to go in the highlight reel for personal branding. I say stand out or stand down.
Yeah, exactly.
No, I love it. And that's the thing that people don't get, and it's not just about Instagram and all those things. You defined it exactly. People get a little caught up, and a lot of people turn their nose at personal branding, but really is about your reputation. And personal branding is just a term that's kind of come along in the last 10 years, but it's really about building your reputation. And it happens to be an open book now because we're online. Like you said, it doesn't take, half a minute to kind of find out things about people. But what you also have is guys like you that start to lean into this opportunity, those channels. It opens up further doors because that audience that wants to work with you, that wants to do business with you, that can learn from you, like it opens up these connection corridors that, are beneficial on both sides of the fence, right?
Yeah, no, that's exactly it. And I think, whatever you're trying to represent. So for myself, it's business building and finance and obviously, fitness and all these things. And so if I showed up, I was out of weight, I looked like a slob, they found out that I filed bankruptcy, all that stuff. One thing I say is consistency breeds trust, right? So, one thing is I had the opportunity to, when I was at Wharton, to sit down with Jim Sinegal, who's the outgoing CEO of Costco, in his office in Seattle. And so when I walked into the office, and Jim, he was clearly a billionaire. When I walked into his office there, it was kind of the Kirkland plastic desk, seats. He was driving, I think, an F-250 pickup when he came. But that's consistent with what he's saying to his employees, the message he's delivering to his customers. If he would have rolled up, I love Ferraris, I have a Ferrari, but if he would have rolled up in a Ferrari, he had this beautiful office, I'd have been like, what the hell is going on? So whatever your message is, you want to be consistent and true to that.
Yes, that is just true. What's happening this year? I mean, are we headed towards a recession? Are we? I mean, it feels that way. I mean, is it just slowing down, or are we truly like going backwards?
Yeah, well, so let's look. I mean, for the people out there, they're going to hear recession. That obviously sounds really scary, right? But I think first of all, what does it mean? It means, the technical definition is 2 consecutive quarters of negative GDP. GDP just being gross domestic product, a measurement of the entire economy. And so when you get 2 quarters of contraction, they'll call that a recession. Now, let's look at it. Q1 was actually negative versus last year. So we're already 1 quarter into it. And if you listen to what the CEO of Snapchat just said the other day, that tanked a lot of different stocks like Facebook and so forth, that things are slowing down. There's some companies that reported today saying the consumer is really slowing down. There's a huge potential that when we finish this quarter, which will be the end of June, that it's another negative quarter. I believe that there's at least a 50% probability, which would mean we are in recession already, and we won't find that out till late July or August. Okay, so what does that mean, though? What do we do with that? And I'm really about actionable strategies. When someone comes to me and says, hey, I think the dollar is going to crash, or I think whatever it is, these strong opinions, that's awesome. But what's the actionable thesis? Because if you're not willing to put all your money into that one strategy, I don't want to hear about it, right? And so the thing being is, one thing you want to understand if you're a stock market investor, let's start there, because what's important to understand about the stock market, it's a leading indicator. So what you're going to see is that stocks will discount the future way before the economy feels it. We saw that with the housing crisis, all these things that'll move in advance. And so ask yourself right now, when you look at stocks like Coinbase down 70%, Facebook down 50%, a lot of stocks, Cathie Wood's a popular fund manager out there with the Teledocs, DocuSign, all kind of the new economy, Web 3.0, metaverse stocks, down 55, 60%. So what happens when we're going to go into recession, let me sell now? Well, shit, that's what most people do. They buy high when everything feels really good. They sell low, and that's a recipe for disaster. You're too late if you're selling stocks that are down 70%. You're basically acting on news that people knew last November when the NASDAQ started to decline. So if we start with the stock market, look, there still could be some volatility, but when you look at certain companies, it's probably too late to bring out the fire hose on the burnt down house. But let's look at some of the other things, right? Like real estate, cryptocurrency, watches, right? Used all these other things that people have moved to. So, why is this time different? Why did we hit like one of the biggest, not one of the biggest, this pandemic that shut down the global economy? And why does it seem like everyone was actually richer during that period of time? Well, let's talk about it. And why is there inflation also, right? We have an inflation. The Fed hasn't been able to engineer inflation in almost 2 decades. So there's 2 things that you need for inflation. Number 1 is supply. Number 2 is velocity. We saw in 08, 09, same thing. The Fed pushed all this money into the economy. Problem was the banking system at that time was bankrupt. So all that money did was it solidified our banking system, which is obviously important. But velocity, meaning did it get into the customer's hand? Didn't happen, right? This time was completely different. Is when we got shut down, people got PPP loans. And I don't even want to talk about some of the crazy stuff. I saw people getting literally hundreds of thousands of dollars that didn't need it. Like, hey, Rob, where do I put this? I'm just going to take it type of thing. And so it went directly, not to the banks, but directly into the consumer's pocket. Now, inflation, it could be supply side or demand side. Well, so here's the thing. Demand, now people have a lot of money in their pockets. The economy was shut down. So there's a huge demand to get out, spend, buy stuff, right? And then from the supply side, as we all know, the supply chain was shut down, and it's still shut down in a lot of areas. Why are G-Wagons going for so much? Well, now, just as we got out of this, the leather is actually manufactured in Russia and Ukraine. So the world supply chain, which I believe this is primarily supply side, the supply chain will open up a year or 2 years. The PPP money will burn off. Interest rates are going higher. There's no new job or anything in the economy that's going to make people richer over the long term. So it will end, whether it's a year or 2 years from now, I don't know. But that's why a lot of assets, because of liquidity, like used vehicles, like watches, and even cryptocurrency earlier on, were propped up because of the fact that there was just too much money chasing too few goods. And then crypto, what I'll say about that is, look, we looked at Bitcoin, we looked at Ethereum. I think everybody by now is probably, relatively familiar with those. But then we had the meme coins, right? And this is typical of any bubble. It happens all the time. We saw it in the 90s, 98, 99. We had the Amazons and the Googles that cleared, Amazon 1999 to 2001, down 90%, 90, right? But then $1,000 that picked it up then turned into almost $1 million. Why did that happen? Well, we knew the web was something great, but you had dial-up internet at that time. Amazon, I was debating, is Amazon better than Books A Million? Should I, buy Ask Jeeves instead of Google? Like we didn't, it was crazy at that time, but that was really where we were. And then clearly as the internet evolved, we saw who the winners were. And if you were able to cast a wide enough net, those winners more than made up for the losers. Well, it's the same thing with Bitcoin, Web 3.0, the metaverse. If you think for any second that that's not going to happen, be part of our future, I would say you're completely crazy. Now, what is it going to look like exactly? Who are going to be the winners exactly? I don't know. Nobody knows. But this is typical. Everybody gets excited about it. We're not really quite there just yet. And they put money into everything. What's the first to get hit? All the Doge coins, the Lunas, all that type of stuff. But then eventually you see this in all markets, the quality starts to come down. And I would say that I do believe in Bitcoin long term, but it's a volatile asset. It's a new asset. There's a lot of weak hands that are in it. And so what you're just seeing is kind of a flush out. And quite honestly, this is something over the long run that's normal. It's healthy. And if Web 3.0, the metaverse and crypto is going to play a role, you need to wash out the scared money, which I think is what you're starting to see right now.
Yep. Makes a lot of sense. And, the speculation is what's just maddening a little bit because, I've been down on Snapchat for 3 years because I thought I just thought there was all that audience was going to TikTok. And as that, segment gets older, they're graduating to Instagram and other things. Snapchat, I've been down, and I'm a social guy, I've told people to sell that, and I don't even mean the stock. I just mean in general. I've never counsel brands to get on that. And I'm not saying you can't. There's not money made there. Then you look at the revenue, and it's like there's nothing wrong with Facebook's revenue.
Yeah, right.
And so, follow the revenue.
Yeah, well, so the funny thing, I was just talking about this on a couple of news channels the other day. What's interesting now, because again, everyone's been scared. If you look at it on a valuation basis, Facebook, it's growing still 25% versus Coca-Cola, Kellogg, Clorox, Procter & Gamble, who are growing 3 or 4% top line, is trading cheaper at about a 20% discount to those stocks right now because everyone's been moving their money into these safe plays to where now the cheaper stocks are the more aggressive stocks because they're down 50 or 60%. But people won't feel good about buying those companies until they're back up another 50 or 60%. Then they'll jump in. Yeah,
I think I'm going to start buying more Meta here shortly. I don't know. It feels like I just don't think it's going anywhere. No matter if it's become my parents' platform for the day-to-day, whatever. There's just too many things going on. I think they're adjusting, and I think Instagram with Reels is figuring some things out. But TikTok's crazy. I mean, are you on TikTok yet?
I'm not yet, but I do realize the opportunity there. We're just still trying to kind of figure out Instagram. I think we're on Facebook, but I spend the time that I spend on social media is primarily Instagram and then some on Twitter because people who follow stocks really like Twitter. And so, I'm kind of on those two channels for me right now.
Yeah. This is the stat I'll leave you with on TikTok. And I spoke at a FedEx event last month or the month before. And because I asked everybody to raise their hand who's marketing or doing on TikTok. And there was, 500 people there and like 5 people raised their hand. These are brands. And these were like medium brand. They weren't like, of course the big brands are on it because they have enough money to spread it out. But 50% of the U.S. audience on TikTok is over 30.
Wow. I didn't think that. You think the teenagers.
You still think teenagers. It's not the teenager platform anymore. Everybody's moving over there, and so there's a lot of opportunity. So it's big. It's only going to get bigger because I think we're so ADD. It's that format. You get down that vortex. It's like, oh, did I just spend 4 minutes? No, it was 37 minutes. Like my producers are in the room, like nodding their head. Yes. So you got to get on over there. What's all All right, I want to ask some fitness questions. Like,
Yeah.
I know you talked about, but just out of personal, because it is a passion of mine. Like,
Yeah.
how, what's the go-to? I mean, you have certain routines, certain diets. Like, what's the fitness tips of the day?
Yeah, look, I mean, at the end of the day, I mean, you can look at all these different diets that are out there. It is about calories, guys. Like it really is simple math. A lot of people say, "Oh, keto works," or this, or well, it's because you're reducing your calories, right? And so, I'm big on making sure just simple rules. I try to get, I weigh about 100, 185 pounds. I try to get that amount of protein every day. I try to on carbohydrates keep it to your complex carbs, your vegetables, sweet potatoes, brown rice, those types of things. I work out. I really try to start every day, like this morning at the gym, 6 a.m. with a workout. I just feel better. I also learned being in business, if I try to put it to the end of the day, there's too many excuses. I don't get it done. So it's a non-negotiable, usually 6 days a week, sometimes 5. I start in the morning. I do both weight training and cardio. I think both are important. I prefer weight training. I love weight training, but the cardio is necessary, especially as you get older for your heart. So I try to eat clean. I try to take natural supplements. I try to stay away from processed food. And one day a week, one day a week, we'll have a meal. Like this past weekend, my wife and I had blueberry pancakes and all that type of stuff because you have to give yourself that out. And that's kind of I'm a routine type of person. That's what I try to stick to.
Yeah, the basics, man. I like it. The calorie thing is so right. There's so many things, and I'll even fall into it sometimes. Like, and I'll do keto occasionally because it makes me feel better. Like, I never could. It's not sustainable, I don't think, but it does make me feel better for a bit because I don't feel like it clears my head or like does something on to getting the carbs out. But it's so funny, like the standards, we all kind of want the shortcut, but it's,
everything, right? Everyone wants a shortcut, but I think you mentioned it, whether it's fitness, whether it's your finances, there's no shortcuts, and do things that are sustainable, right? Like I'd rather, if I'm trying to drop 15 pounds, I'd rather do it over 3 months in a way that I know is just a lifestyle adjustment versus the water diet or whatever it is that you can't stand. Because those things never work. And it's the same thing with your finances. It's just, look, I'm not going to go on a vacation for a year. I'm not going to, these people that try to save their way, I'm not going to buy Starbucks. Like, come on, like you got that's not what's going to get it done. You got to think a little bit bigger and more longer term with your decisions.
I will say this, it's too correlated now. If you go look at who's really kind of getting after it right now. And I know it's the more people that are out there. I'm sure there's some behind the scenes folks. There's millions of billionaires hiding, amongst this. But I mean, even look at Bezos. I mean, like, a lot of the most successful people right now are getting their ass in shape. Like there's a correlation there. Well, cool, man. Let's talk about, as we kind of close out the episode here, I know you're doing some coaching. You've got it on robluna.com, all that stuff. But talk about how you're maybe, the democratization of your knowledge and how you're coaching people and what that process looks like.
Yeah. So, like I said, when I decided, and actually, Brad Lee is a friend of mine. He was one of the people who said, you got to put it's self-serving, of course, for Lightspeed. You've got to put this out.
Hey, Brad, self-serving. Come on.
you got to put this out for more people to have access to. I said, okay, cool. Let me kind of think about what that needs to look like, because I don't want to do anything where I don't make a difference in people's lives, especially for $99 a month. And so I said, look, what I need to do if people really want to build wealth, I have to have 2 tracks. I want to show them how to build a sustainable and growing business. And then I need to show them the cash flow that starts to come off that business. How do you invest that to be able to secure your lifestyle, right? And so I created the Rob Luna Wealth Academy, where we teach those 2 things, just like most people's program. We have interactive courses that are on there. But I think the big differentiator is the second component. I said, look, the economy, as we're talking about now, changes so fast these days. What's a good opportunity today might be the worst opportunity tomorrow. So I want to make sure I'm touching base with people weekly. So every week, me personally, I'm on there for about 45 minutes on the wealth management side, 45 minutes on the business building side, coaching people of what are we doing in our businesses? What are the things you should be doing in advertising, your balance sheet? We started talking about 6 months ago that there could be a potential recession. What does your balance sheet need to look like to get you through if you have a decline for 12 to 18 months? And so, those are the things we do. We have about maybe 600 members now. We launched it about 14 months ago. So it's growing really. We're looking at it now. We haven't done any paid advertising yet. So it's all been organic from Instagram.
Yeah.
So great.
Hey, I know somebody that does some paid ads now,
Yeah. Yeah. Exactly. I'd love to talk to you.
Yeah.
But yeah, no. So we're changing people's lives, and so they come in. We have them create their own financial plan. We show them how to invest. I have only the best people, MBAs, chartered financial analysts that do office hours with people if they want some one-on-one coaching. So I feel like, everyone complains. I talk about this wealth gap and they think it's, government programs and all this shit. And that's not what it is. It's showing people how to make a living and how to save for their own future. Because, I think most people know, and the numbers back it up, that Social Security is bankrupt. And so when you start thinking about what that's going to look like if you're 25 years old today, what it looks like is it's gone, right? And that's why I believe long-term in things like Bitcoin. I believe long-term in securing your own future. All those types of things are extremely important, and that's what we teach people how to do.
Cool, man. Sounds both practical and forward-thinking at the same time. And it's good advice if you're telling people 6-8 months ago to be planning for the recession, because I don't think a lot of people were. And even if if people sort of talked about it, but actually practically getting people in that, right, frame of mind, while also more importantly getting their books ready for it.
That's a scary thing right now, Ron. I think we're at a point in time where people have started businesses over the last few years in different industries that people are relying on, and they don't have the balance sheet. I had an experience myself, last story I'll tell, during 08-09, where I hired a contractor, gave him $200,000, and during the 08-09 meltdown, they filed bankruptcy on me. I lost a lot of money, right? Because they weren't prepared for anything. There was, one job paid for the next, the balance sheet ran very thin. So it's a type of environment where I think you're going to start to see that there's just the tip of the iceberg out there, and underneath it, there's some serious problems. So I think in these types of environments and economies, be very diligent about the people that you're giving money to. Don't prepay 4 months of a small gym membership if it looks like they're about to go out of business, because you might lose it. So start being a little bit more cognizant of who you do business with.
Yeah. Yeah, definitely don't prepay the gym membership. There's too many other options out there. Or get in Planet Fitness for $9.99 or whatever the hell it is.
Exactly.
Rob, it's been great, man. I know we've mentioned it a few times, but let's plug where people can keep up with you and learn more about you.
Awesome, man. I appreciate it. Yeah, Instagram at the Luna Rob, same thing. On Twitter, my website's robluna.com. I know my team did is anyone, two things. If they want to join our academy, there's $1,000 off if they go to robluna.com/Radcast. Also on that same link, I have a video that we did. I think it's $99 on our website. They're going to give you a coupon for free to download it. It's the 7 biggest mistakes investors make. It's about 45 minutes, but it's really important, I think, especially at a time like this. One of them is selling into panic, so they can download that also for free. I'm restarting my YouTube channel with the idea being I want to give people access to quality information all the way from free up to obviously paying for personal time. But that's just something for your listeners. We'll have that up there for a month or two if they want to use that. Sweet.
Well, I look forward to promoting the show. We'll have to do live or something in a couple of weeks when this comes out. And really appreciate it, brother. Look forward to staying in touch and I don't know, doing something together down the road.
For sure. Absolutely. Appreciate your time. And thank you guys for giving me a platform here to talk to your audience.
Absolutely. Hey, guys, you know where to find us, theradcast.com. Search for Rob Luna. You'll find all the highlight clips from today. You know where I'm at Ryan Alford on all the platforms. Go hit me up on TikTok. It's blowing up, and so am I. We'll see you next time on the Radcast.